morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 12th, 2025. I'm Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame here. Bit of a gap down after the after hours open yesterday. Inside day at the moment, 45% of average range heading into the RTH open. The previous session was a 200% of ADR day. Pretty high range session here for yesterday. Let's bring this up one day right there, and you can kind of see here the previous session with the yellow bar. That's a 200% of ADR day. Big high range session. However, is this a true breakout to the upside, or is this kind of the development of an expanding range, just kind of building a wider range here for this market from the smaller range that it had been developing? We still haven't really pushed through recent highs. This one is suspect right now at the moment at these highs. Again, a pretty significant squeeze, especially during a holiday week here. Held it last week. This week's been back and forth with Fed. So it's hanging out at these highs, but got to keep an eye on this pivot low right here. If that pivot low is taken out at some point over the next several days, that could open up quite a drop to the downside up ahead. So right now, short term, sideways to up, still bullish here, but keeping an eye on this range here, because any failure could rotate this thing back down within the already larger trading range that we've been developing. So any failure here and you're back down within the range with another shot to rotate back up. All right, looking at the NQ here. NQ down 0.5% heading into the RTH open. This one here with earnings out of AVGO, and right now AVGO lower ahead of the RTH open right now, gapping down as of right now, and that's led to a bit of a gap down here at the after hours reopen, pushing through the previous session's midpoint right now. Again, a tail event yesterday, but still within range. So this is not like a normal wick reversal that we might look to for a rotation back up. Instead, this could have been the result of the close after back and forth price action within the trading range. So you can't really judge it that way like you normally would. Instead, got to keep an eye on that pivot low like we mentioned with the ES. Any failure there, and you're rotating back down toward 24.5 and 24,000. All right, looking at crude oil. This one, since the Fed day, has pushed a little bit lower. We're kind of at the lowest levels we've been at for the year, really. We're here at 56s, trading 57, 59 right now. The lows for the year are right back here at 55.5. So this is generally the low spot of the year for this market right now, and we're kind of coming right into it. I mentioned before, if we can just get one last flush, that could open up quite the move to the upside. This is getting to the point here where if we get one more drop here, the bullish seasonality opens up heading into the end of the year, and typically speaking into the first week of March under bullish circumstances. How bullish will this bounce be? We'll see. But if so, 64 to 66 could be an easy bounce back point. If we go a bit beyond that, perhaps we have a shot for 70 plus down the road. So watching to see how this plays out. All right, looking at gold here. This one's up 1.5%. We talked about the potential expansion out of this range. We talked about the continued overall bullish trending price action, and hard to bet against the upside here. And which way do we go out of this range? We finished out of this range barely yesterday. Look at the modest overlap here at 4,300, launching today. I mentioned before, this range right here has 250 to 300 points of range of energy built into that range. And depending on how you want to look at it, so are we saying 4,300 plus 250 gets us 4,550? That could be a way to look at this. I tend to use the low of the breakout bar. So if we're looking at a 1, 2, 3, 4, 5, 6, 7, 8, 9 day compression, and then this is your day one breakout, then I may use that low and project higher the 9 day projection. So in that case, the low here is 42.31. So we call it 4,200, 4,250. 4,250 plus 250 is 4,500. That can be an easy target to the upside. We're at 380 already. 4,500 is also the next market structure level up. So that compression right now with this upside break is driving this thing to the upside. Very bullish breakout. We've seen it time and time again, as we've noted. This is the next iteration. 4,500 could be the easy upside target in the very short term. All right, looking at the YM. This one yesterday outperformed in a massive way. It has outperformed since Fed Day. You see the 2-day massive move here. The previous session, 200% of ADR day, almost 1,000 points of range. That was huge. And to the upside. Can it hold on here, or do we start to see some sort of fade? Again, tech lagging behind, ES lower today. Do we see a little bit of a thrust reversal develop up here, which could put us back into the range marginally, and maybe we go sideways into the close? Do we get a digestive day with little to no economic data points today on a Friday after a pretty aggressive Wednesday, Thursday finish post-Fed? Do we get a little bit of a digestive day? This is what a thrust reversal would look like here. That signal rejecting the high, back toward the mid. I don't think we get a move to the mid, but back toward the mid in this case. This is too big of a range. But this could be a little bit of back and forth here. The next key level up, 49K. So if we get into 49K again, the expectation may be a little bit of a backfill toward 47, as this is the range. Through 49, you open up 51. All right, looking at Bitcoin. Here's Bitcoin, 92,600 right now. Look at it since Fed Day. Right there, that's the level. That's your Fed level, 92,770, and we're at 92,605. We're right on top of that level. We are right on top of that level right now. We haven't budged, and that's very odd. No movement right now, so maybe next week we get some big-time movement away from this level. Again, I've mentioned that this rotation was very, very likely. The longer we go kind of sideways to up here, the more maybe it's building for that upside break. But I still have to continue to honor the overall trend here. This flag pattern or pennant pattern could still rotate either way. 95K, that's the big level for the breakout. If this thing breaks through 95K, like we said, the next 20,000 could be to the upside. We fail here, the next 20,000 could be to the downside. Which way are we going? A ton of energy built up right here. And when you look at the higher time frame pivots, the higher time frame key levels, we could withstand one more pullback to the best zones down here. S3 on the yearly bands, 75 market structure edge. Those are major market structure levels and key levels that could open up a great return across the range down the road. So being patient for the next move. Looking at ETH, similar price action here. Here's your Fed day. Price offered since the Fed day. We're still trending down. It was offered last time on Fed day and rotated lower. We're sitting right at year-to-date value by way of yearly VWAP. That's also the 200-day moving average right here. We're right around value right now. There's no real edge in ETH. Rejections up here were very apparent. We called that as the potential day one high. We were right on that. Mentioned that we could get a pullback toward 3,000 at the very least and into value. We've gotten it. Now that we're here, we could continue to chop around value a bit. I don't want to be too aggressive here late in the year off of these levels. But if we get one more rotation down, it starts to get really interesting down here below, say, 2,200 into 2,000. That gets really interesting because doubles start to show up very, very quickly for this market. So being patient with ETH as well. All right, that is it for now. We'll see how this plays out heading into the weekend. Please give me a big like, share, and subscribe. Have a fantastic weekend. I'll see you in the trading room. Take care.